Hey traders, welcome back to Explain the Charts. Today, June 5th, 2025, we're analyzing NZDUSD, New Zealand dollar versus the US dollar, considering both the latest news and detailed chart analysis. Recent news indicates NZDUSD refreshed a 7-month high near 0.6055, outperforming despite US-China trade worries. We'll investigate if the charts confirm this bullish momentum. Reports also mention the RBNZ's leadership restructuring. Let's see how this might be affecting the Kiwi's performance on the charts. We'll cover important support and resistance levels, potential bullish and bearish scenarios, and key price points for informed trading decisions. Let's start with the daily chart. Looking at the last year or so, we see a volatile period with significant swings. We can observe a series of lower lows and lower highs followed by a recent upward trend starting around late January 2025. Notice the long bearish candles in November of 2024 and January of 2025. It's a significant drop to levels not seen in a while. However, since then, we've had a clear uptrend, suggesting renewed bullish sentiment. Let's zoom in on the more recent price action on the daily chart to the last 6 months. We can see how the pair reached a high in June 2025, then dropped back down in the past few weeks. We see prices bounce down to a level near 0.59, but we've now bounced back up over 0.60, signaling the bounce may continue. Given the earlier report of it reaching a 7-month high near 0.6055, it seems there is now more work to do. Now, let's switch to the 1-hour chart for a closer look. This will provide more granularity and help us identify shorter-term trends. We can see from this chart the price has been consolidating lately. Let's take a close look at the 15-minute chart. This will show us the most recent price action. This chart shows us more of the consolidation behavior. If this consolidation breaks downward, it may drop back towards the 0.59 support level. If this consolidation breaks upward, it may push towards the 0.6055 resistance level. So, what are the key takeaways? First, watch the 0.6055 level closely. A sustained break above this point could signal further bullish momentum. The 0.59 level remains a critical support zone. Failure to hold this level could indicate a bearish reversal. In the short term, the consolidation pattern on the 15-minute chart suggests indecision, so watch for a breakout either way to trigger your trades. Remember, traders, always manage your risk and never trade with more than you can afford to lose. Thank you for watching Explain the Charts, and be sure to like and subscribe for more in-depth market analysis.